What's going on, guys? Welcome to the weekly technicals live session for September 16th, 2018. And we're going to start off and look at the weekly time frames on all of the charts first. That way we can get an understanding of what the markets are doing on a weekly basis, and then we'll drop down to the daily, and then we'll go from there. And those of you in the premium group, of course, in the daily technicals videos, will continue to break down the intraday time frames, such as the 4-hour and 1-hour time frames, so we can really dial ourselves in and figure out where we're going to buy and sell the market. So jumping right into it, if we look at dollar index, this is the weekly time frame again. If you really analyze this, we've got this high that formed here, which I believe now is a longer term high in place. When this high was forming, we were talking about how it could be a potential long-term high to swing high, and well, at least it does look like that is what's unfolding here, because if you look, we've got a high, a low, the market came back up, posted a lower high, and then this week here we've traded below this low, making another lower low. So if this market is going to remain bearish, I would not expect it to go back above 95.74. If we get back above 95.74, then we have to assume that we could potentially run this high up here, or at least come back up in this area. So preferably I'd like it to stay below 95.74 for bearishness. And of course, in terms of liquidity, we're still targeting these lows down here, which is the 93.20 equal lows on the daily basis. So let's drop down to a daily time frame now, and you can see we've got a lot more details on the chart here. These are the equal lows at 93.20 that we've got, and if you look at this, I want you guys to really notice the reaction that we had off of the 50% level of this bullish order block, right? So we first initially reacted off of it here, came all the way back up, cleared out the liquidity above these highs, above 95.60, and then ultimately we sold off, and Monday we posted a lower high, and then Monday, Tuesday, Wednesday, Thursday, all bearish days, taking us below the liquidity here. Well, actually it formed equal lows, and then Friday, as you can see, we opened, traded lower, took out the liquidity, and then we reacted and pushed all the way back up. Notice where we've pushed back up into and closed the week within the ICT daily bearish order block, right? So we've got the ICT bearish order block low, we've got the ICT bearish order block open, and then the 50% level actually comes in where this purple line is, which is 95.18. I'll just double check. Yeah, 95.19 actually on TradingView's platform. So the fact that we're within this ICT bearish order block, I think once this market opens, we could get a little bit of bullishness, but I would not expect it to go back above 95.20. Okay, so as long as we remain below 95.20, I'm thinking we're going to continue bearish, and we'll continue shooting for the daily liquidity below the market. Okay, so I'm going to remove this off my chart because we don't need it anymore, because we've already cleared the liquidity. Okay, so the next level of liquidity will be down here, and just to clear up my charts. I'm going to still leave this 50% level on because it's clear that it is a pivotable level right now. And if we close below that on a daily basis, for example, notice how Friday we've had a bullish day. And this is also Friday's trading of last week as well. So you can notice that we had a bullish day on Friday, and then we sold off Monday, Tuesday, Wednesday. That became an ICT bearish order block. We retested it Thursday and sold off. And then Friday here, we're back within it. So I'd like to see when the market opens, it's totally normal for them to get a bit of bullishness through Sunday and maybe even into Monday, but personally I would not expect them to go back above 95.20. As long as we remain below there, I think the bearishness will still be significant, and we'll see lower prices taking out all this daily liquidity below the market. Okay, so again, the directional bias on dollar index remains bearish. If we get above 95.20, then we have to assume we're probably going to run the 95.74 high. And if we do get above 95.74, at that point, we may have to switch our stance to potential bullishness. But as long as we remain below 95.74, I think we'll get continued weakness and really dialed in here on the daily. As long as we remain below 95.20, we should in fact see further weakness in dollar index. Alright, so let's take a look at euro dollar, and let me actually go on a 1 hour and clear this because I'm showing that on a daily. Alright, so we're going to start with the weekly perspective on this as well. And as you guys can see, again, we've got that low that formed the same time that dollar index posted that high that we seen. And as this low was formed, we did mention that this could be a potential swing low for a longer term swing. And that does look like it is going to end up being the case. If you look at it on a weekly perspective, we are just continuing to build a bunch of liquidity above the 1750 to 18 big figure level. And if you look at this on a weekly basis, last week we did not make a higher high, so I would have liked to see them post a higher high, but this could just be trapping a bunch of retail traders thinking that it's found resistance and it may sell off. And if you look at a daily perspective here, we were spot on with our analysis last week in terms of these equal lows being ran out. As soon as the market on Monday last week started trading, we opened up, cleared out the liquidity below the daily equal lows, and we had a nice bullish reaction from there. So that was basically made available to everyone who watched the weekly technicals video, whether you're in the premium group or if you watched it on YouTube. And you mark out these levels, you would have heard me mention the equal lows being ran and a potential turtle soup scenario, which is a rejection and a trade in the opposite direction. So here you can see that the market ended up moving about 175 pips. It actually went for a little bit more, about 180 pips total, but spot on with the analysis last week in terms of rejecting the equal lows and pushing up. So we have not cleared out the liquidity above 1750 yet. Again, as you can see, we're just keep building up a bunch of liquidity above that area, 17 big figure to 1750 to even 18 big figure. Now, if you look at this again inversely to dollar index, we've seen rejection on euro dollar. So notice how Friday, again, for the whole week, Monday, Tuesday, Wednesday, Thursday, continued bullishness. Made a higher high here, but we did not make this. We did not get back above the 1740 level or the 1750, which is what I was looking for. But again, the high of the week ended up coming in at 1720, so about 30 pips shy of that. Nonetheless, definitely multiple opportunities for trades in here. So Friday's close, we've seen the market back within this daily ICT bullish order block we've got here. So let's go ahead and we'll mark out the levels of that together. And obviously, since we're below the high of the order block already, we're just going to use the open. There's no sense in adding more levels than we need on the chart. So the open comes in at 1629. And we're going to make that blue because it is a support level, and that's it. Okay. And also, let's go ahead and mark out the 50% level because we know that would be the absolute lowest we would expect the market to go in terms of a sell-off. But the last level of support would be 1590, which is the 50% level of this daily bullish order block. Keep in mind that I am using both bearish candles because if you blend both of those candles together, that would form one bearish candle all in all. So we're going to measure, using the fibs, we're going to measure both of those candles together. We're not just going to use one. Alright, so we've got the 50% level at 1590 marked out now. And if this market continues trading lower, we shouldn't see it go below 1590 in terms of if this market's going to remain bullish. Now, if we get back below this 1530 level down here, which I don't think we'll actually get, but if we do, then at that point, I think we're going to run back down to the 1440s, to the 14 big figure level. So either way, again, just like last week, doesn't matter which direction they go. While I am leaning more towards the bullish side for this pair, it doesn't necessarily matter what they do because we've got our levels marked out and we can anticipate what they're going to do. So basically we have this is support, this is support. If the market shows us support on the lower time frames at these levels, we would buy it and look for a target of 1750 for the week. And if we close below this 1590 level, then at that point we have to assume they're going to run 1530. And if we close below 1530, we have to assume they're going to run down to the 1440s, 14 big figure. But again, overall, I am bullish this pair. And if you look, this is a daily break of market structure, so we've broken back above this high. So before that, we were making highs, lows, lower high, lower low, came all the way back up, made a higher high. And if you draw our fib on this low to the high here, you can also see that the 50% level lines up right in between the 61.8 and 70.5 level. So again, we can use these three lines here, the 79%, 70.5, and 61.8 as potential support levels. I am leaning more towards the side of using the 1590 to 16 big figure level, because I think we should get some support around that area. It's a 62% retracement, daily bullish order block, 50% level. There's just a lot of things lining up and confluencing with that level. So 1590 to 16 big figure, I'd like to see this market find some support. And again, I would want to see them run back above 1720, clear out the liquidity above 1740, and of course my the week's objective. So by Friday, I want to see the market get above 1750, which is all this liquidity built up back here. So let me go ahead and remove my fibs now, and we will go ahead and drop down. I just see these lines on here and it's bothering me. Alright, I don't even know what they are. Okay, so let's go to GBP USD now. I gotta take off this drawing here. Alright, so looking at GBP USD, again, nice bullish run up on this pair yesterday. We traded within this ICT bearish order block here, really small bearish order block. Personally, I don't like using these too much. I'd like them to have a bigger body, something like this, like a bigger body bullish candle for a bearish order block. So as you can see, we pretty much traded right through this. They usually don't hold too much resistance if they are like a small body bullish candle for a bearish order block, but again, we still have to factor in that it could be a potential resistance level. So for this, I am still targeting the high back here, which ends up coming in at 3170. So about 100 pips from where we're at now, and that's where I would like to see this pair go. Preferably by the end of the week, I'd like to see it get back above 3170 here, and we have a lot of liquidity built up above these highs here. So this high, and this high. First things first, we need to get above this high to know that we're going to be targeting the liquidity above these. But I think longer term, we're going to clear up all this liquidity above all these highs in here. Again, once we get back above this high, I'll add some lines above these levels here. But in my opinion, it's just a little too far away right now to put those lines on. So obviously, if we get some major strength in this pair this week, then obviously I'll have to adjust my charts and add these levels on here. But right now, current price action, this is the first level I'm targeting, which is 100 pips away. Totally satisfied if I can get a trade on board and clear out 100 pips with this. So I'm going to remove this level here now because we don't really need it. We're really not much use for it in my opinion. But we do need to mark out this level here. So we've got this high now. And this is, the high comes in at 30.43. All right, and so basically what we've got here is, if you look at the market, we've got a low, high, higher low, higher high. Market comes all the way back down, turtle soup, runs a liquidity here back into the bullish order block. Then we start trading higher again. We've closed above these series of down candles, so you can classify them as, you know, bullish order block if you'd like, or also look at it as we've broken out, and this would be a retest of structure, right? So we've got a daily break in market structure now, and next level of liquidity is resting above here. So I would like to see some support come in around 30.40 to 30.50. While they can trade a little deeper into these four candles, what I'd like to do is mark out the 50% level. So I'm going to use the bodies of the candles. I'm not going to use the wicks. I'm just going to use the bodies of the candles, because when we're mapping out the 50%, it's always best to just use the bodies, not the full candle, including the wick high and the wick low. All right, so we've got the lowest body and then the highest body mapped out, and the 50% level comes in at 29.38. All right. As you can see, it perfectly lines up with this little gap that we've got over here too. So I take it that's not a coincidence. So what is that level again? 29.30. Oh no, it's 29.38. Okay, and we need to make that 50% level. Okay, so the market could trade all the way down here. Now, I don't necessarily expect that. That is a ways away from, you know, where we're at. It's about 130 pips. Now, if we're going to have a bearish week, you know, we could trade all the way down here for the week, and then next week we have a bullish week and react off of that. So that's a potential idea, but I don't necessarily see that happening. I would more or less expect them to find some support here at this 30.40 to 30.50 level. And the reason behind that is, look at what we've done. So the market came all the way back up, wicked above the level, cleared out the liquidity. Next day, the market blasts through it, comes all the way down, and ends up closing pretty much right where it opened. Very small body day. Same thing for this candle. Next day, we get a nice bullish move, and look at the body of the candle, closes above all this. So then Friday, we open up, we trade higher initially, and then we ultimately reject, and we start pushing for what? Looks like we're going to be pushing for this level, if you ask me. So as we refine it to lower time frames, you know, in the daily technicals and things like that, we'll really be able to see. But looking at it from a daily perspective, I would definitely expect some support to come in at 30.40 to 30.50, and then target the 31.70 level. So that in itself is about 130 pips. So that is pretty much it for GBP USD. So if we get below 29.38, so 29.40, if we get below that on a daily basis and close below it, at that point I would have to, you know, kind of do a reanalysis on the pair and see whether or not we're going to consolidate or we're going to trade lower for a bit. Because if we do get below there, we are still within this daily bullish order block here. But these are relatively equal lows. Even though we've cleared out the liquidity, they are decently equal. So they could push for the liquidity below here. It really just depends on how they behave when they get down here, if they do. But again, more or less, I would expect them to react off the 30.40 to 30.50 level. Again, if you look at the 4-hour chart here, you can see we've got a 4-hour order block lining up with that as well. So few things lining up with the 30.40 to 30.50 levels, and I definitely think we should see some support for GBP USD at or around those levels. All right, so let's look at Euro GBP now. And this one here, again, we're back within the consolidation as we mentioned. So we had a nice bullish run here, but ultimately we're back within the consolidation. So I don't necessarily see a fully bearish market yet. If we get below this low and we keep trading aggressive, because we have been selling off relatively aggressive in this pair. So that's just also making me think, cable may be stronger than euro based on what we're looking at here. Again, we're gonna let Sunday and Monday's trading go through, and we'll see what the market gives us on those 2 days, or really day and a half, so we can really dial ourselves in and figure out, in terms of a direction for the week, what specifically are they gonna do, like which of the scenarios that we've mentioned is looking like it's gonna come into play. So we do have some liquidity down below 88.50 for Euro GBP, so that would be the next downside objective for this. Now, there's really no levels of support in here that I see, in my opinion. So, this could be a scenario where they wick below here, turtle soup, and push it back up. But I'm basically seeing this as a consolidation, right? We've been in this consolidation for a while. We finally broke out of it here, but we weren't able to hold above it and immediately rejected. Traded back within this bullish order block. So at that time, I thought, okay, they should find some support. And if this is in fact a bullish market, we've got a low, high, higher low, higher high, higher low. And I was expecting a higher high. We did not get that. We ended up posting a lower high, sold off, got below this bullish order block here. Traded back within it, acted as resistance, and starting to sell off again. So nonetheless, I'm thinking we're either going to be consolidating in Euro GBP to bearish on Euro GBP. Now, with that being said, what does that set up for Euro USD and GBP USD? Well, if this pair consolidates, Euro USD and GBP USD should be able to both trade in sync with the dollar index. Meaning, if we think the dollar index is going to continue pushing lower, Euro USD and GBP USD should both be free to trade higher. Now, if this pair continues to push lower in a very aggressive manner, then that means Euro is weak and British pound is obviously stronger than Euro. So at that point, if we're still seeing weakness in dollar index, we would have to basically outline GBP USD as the better buying opportunity. So both look good to me at the moment, Euro USD and GBP USD for buys. And as I mentioned, we've went over all those levels that we're going to be watching for in those pairs. So they do look bullish to me, and I think we'll continue trading higher on both. But at the end of the day, if we start getting a lot of selling in this market, we may have to focus majority of our attention on GBP USD and take a step back from euro dollar because it may consolidate for a bit. So if you notice, we've got that those equal highs above the 1740 to 1750 level on euro dollar, and if we just if we are going to consolidate, they can just hold that liquidity and keep engineering more liquidity above there until they're finally ready, and then just blast it through there and clear out even more people. So that's kind of what I'm thinking if they do decide to hold euro dollar in consolidation. But again, as I mentioned, both look relatively bullish to me, especially for the week. So if anything changes, of course, I'll let you guys know. But from the looks of it so far, I'm bearish dollar index and bullish on foreign currency, especially euro dollar and GBP USD. So with this, there's really nothing else to talk about other than just the fact that I think we're either going to consolidate or we're going to push lower for the liquidity below 88.50. So if we close below 88.50, at that point, we're going to have to assume that we're probably going to continue running lower for this liquidity up in here, which at that point would basically post GBP USD as a better buy than Euro USD. All right, so let's move over to dollar yen now, USD JPY. So honestly, now that we're analyzing this pair kind of week by week, it's occurring to me more and more that dollar index and this pair, it does not follow dollar index like Euro USD and GBP USD do. Put it that way. So this pair is more or less can do its own thing. So in my opinion, you have to rely more on the technicals. So you have to rely on the turtle soups, the bullish order blocks, the bullish and bearish breakers, directional analysis, where's the liquidity, equal highs, equal lows, all that stuff. So when you look at this pair, we've been mentioning the 112.20 level for a while. As you can see, Friday's high came in at 112.16, so just 4 pips shy of that level. I think this week we'll get above 112.20 in my opinion. Now, when we get above there, it is really the question, right? Are we going to continue, or are we just going to post a turtle soup and then sell off? I'm more inclined to think that they're going to turtle soup and then sell off. So I think they're going to run the liquidity and start trading lower. So if they run above here, they'll get a lot of people thinking, oh, it broke out, it's going to go long, it's going to trade higher now, all that stuff. I'm more inclined to think it's going to trade lower after that, but we'll just have to see what happens. But looking at the market, you can see we've got a daily bullish order block here. Market ends up trading into that, reacts, and has a nice little reaction. We post another daily bullish order block here. So ultimately, we would need to see the market get below this daily bullish order block 50% level for confirmation of bearishness. But up until that point, we have to remain bullish on this pair. So that's why I'm not really trading it or calling any signals or anything on this, because if you look, we're just in a consolidation, right? Yeah, we are trading higher, but again, it doesn't. There's more things that line up with Euro USD and GBP USD for me, in my opinion, right now than focusing or even putting my attention towards this pair. So I'm more inclined to think that we're going to get a turtle soup and then start trading lower. But again, we have to get below the 50% level of this daily bullish order block. So let's just go ahead and mark that out now. And I'm going to delete this one because this was the 50% level. So just take a look at this really quickly too. I just want to make sure that this is what it is. Yeah, okay. So these two up candles was a bearish order block, right? So this big bearish candle created or validated these two up candles to become a bearish order block. Notice how we wicked into it, traded through it, came back, retested it, and had a nice bullish reaction from there. So notice how, it doesn't always have to be break of structure retest. It could just be break of support, break of resistance retest. And that's what you see here. So using those bullish and bearish order block levels, they're very key, because once you get above it, expect it to retest it as support or resistance based on what you're looking for. This was old resistance, now became newfound support, bullishness, right? So we're going to move that to this bullish order block here, and that level comes in at 111.44. All right, so if we get back below 111.44, at that point we have to assume that the bearish confirmation is there, and we'll look for a retest of that level and just continued weakness, going for the liquidity below 109.80. Okay, so that's pretty much what I got for dollar yen. Again, not something that, I'm not super excited about this pair. Nothing really that I see too enticing, but nonetheless, I think they're going to run the liquidity above 112.20. What they do from there, I don't really know 100%, but I'm thinking they'll sell off. But nonetheless, they could continue bullish. If they do, I'm expecting a run on these highs from 113 big figure to 113.20. All right, Australian dollar. In my opinion, this thing has had a massive sell-off. So, we got below these daily equal lows here. If you ask me, I think they could be forming some type of longer term low in here around the 90 to 71 big figure level. Don't quote me on that, but to me that kind of looks like what's happening in here. Looks like they're kind of carving out some sort of longer term low at this level. So just for fun, we'll highlight it and see if they end up holding it longer term, because obviously if they get back way above these levels here, and we called the low way down here, that's nice. So ICT bearish order block that we mapped out last week, these two up candles, as you could see, got back above that. So let's see if we can retest that level as support and start trading higher. Ultimately, again, I do see a potential longer term low being carved out. We've got a lot of liquidity resting above this market. Not to mention, look at how clean these highs are way back up here. So it would just kind of make sense, come all the way down, take out the equal lows, come all the way back up, take out the equal highs, right? So, just consider that. And if you're trading this pair, again, just kind of like dollar yen, not really something I'm too excited about. There's nothing too clear to operate on, if you ask me. I would like to see them get back above this high at 72.40. At that point, it'd be a daily break in structure, and we could look for a retest. It would be within this bearish order block here, but I wouldn't really consider that too much of an issue, because we would have the daily break in structure, and a retest of that would just be a retest of old resistance, now newfound support, and we could see continuation from there. So if we get below 70.80, obviously everything changes and we have to move to a bearish stance, which could in fact happen, since we do have high, low, lower high, lower low, lower high. Could potentially get a lower low. However, I am expecting further weakness on dollar index, and with this pair here, again, kind of looks like it's carving out a longer term low. So in my opinion, this could be a longer term swing trade to clear out all the liquidity above here and potentially way back up here as well. So just the liquidity from here to current price is 340 pips. But if you map out the full swing, which this is much, much, much longer term, I'm talking this could be a full year. But that's about 990 pips. So that's a significant move. And if in fact this is a longer term low in place, we could definitely see some nice expansion to the upside on this. So I'm just gonna go ahead and save this as an idea. That way I just have it bookmarked for my journal. So just give me 1 second and bear with me while I do this. If you guys are wondering kind of how I journal, this is pretty much how I do it. I have like the things that I'm looking for, and basically just like save images of the chart of like the type of price action or ideas that I'm forming about what could potentially happen. So I'm not going to like be super specific with every retracement, but just kind of like an idea for myself. Market would obviously break structure, retest, and then look for further continuation up. So let me save this idea. Sorry guys, just bear with me really quickly. All right. Now I can go and delete all this, and then we'll resume our analysis. I just like to have all this stuff saved because, I mean, at the end of the day, if the market gets way back above here and then we talked about it, you know, today, and this happens 6 months to 8 months from now, I'm not going to remember what day we were talking about this, so saving it as an idea just makes it easier for me. So again, I think we've got potentially a longer term low in place. So I am technically bullish this pair. There's just no clear levels, in my opinion, I want to operate off of. So we've got these order blocks down here, this little patch of consolidation. So on a 4-hour basis, this market could trade down to 71.20 to 71.40, find some support there and start trading higher. But again, if we get below 70.80, we have to do kind of like a reanalysis, and we could get some weakness on this pair if that's the case. All right, so let's move on to the next one. We've got Nzdusd. This one here, similar scenario as well. See if we got anything to look at back here. Relatively equal lows with this. So we do have some liquidity built up here. We've got equal lows. So if they're going to continue lower, obviously those are the levels we're going to be looking for. But again, kind of similar scenario with Australian dollar. I'm potentially seeing this as maybe a longer term low. Again, we're going to have to break some sort of daily structure for me to feel confident in that, and we haven't got that so far. Again, here's another example of old support becoming resistance. So we've got daily bullish order block marked out here. As you can see, the market gets below it, comes back up, retests it, and sells off. So notice things like that. Make sure you keep those levels on your chart so you can, you know, actually see how price behaves when it gets to those levels. And I just wanted to show you that example real quick. So last week we marked out the low of this bearish order block. As you can see, we pretty much traded up within it, so we're just going to remove that now. And we're going to mark out the 50% level of this ICT bullish order block, which comes in at 65.72. All right, and as you can see, the bodies of the candles have remained to stay below the 50% level of that candle. So far, we've still got a bit of indications of bearish price action, but again, that could change once the market opens up and if we start trading higher. So again, you know, that's why I'm not really saying with you know, the utmost confidence that this is a longer term low. Same goes for Australian dollar, but if we do get a break in daily structure, then I'm way more confident that it could in fact be a longer term low, but only up until that point. So I want to see this market get back above the 50% level at 65.75-ish, and ultimately run for the liquidity above here at 66.15. So let's just go ahead and map that out. And if we get back above there, that's a daily break in market structure, and I'm a lot more confident that we've got a longer term low here in place if we get back above this high. So again, that high comes in at 66.16. All right, and yeah, that's pretty much it for this pair. So, you know, we've found resistance, but let's see if we can find some support here. We probably got a 4-hour level or something, I'm assuming. Yeah, so we're within a 4-hour ICT breaker here. So we'll see if that actually holds as support. Let me just change this. All right, so these two up candles, basically we made a higher high here. I'm sorry, not a higher high. We started trading higher and then we traded lower, ultimately clearing out the liquidity below here. We've gotten back above that level, so that basically acts as like a pivotable level. So if the market's below this, we'll expect weakness. If it's above this box, we'll expect strength. And so now that we've got that mapped out, the levels are from 65.40. is this? 65.40 to 65.20. 65.40 to 65.20. So that 20 pip area, I would expect this market to find some level of support. We've got a 4-hour order block within here as well, around the 65.30 level. So I do expect that this could potentially be a longer term low if we do in fact find some support here. So early on in the week, we could just test this level and have a nice little reaction from there. So just trade into it a bit and ultimately reject and start pushing higher. So that's what I'd like to see for this pair. So far we've got things to support it, but again, for the confirmation and for me to want to take any type of trade on this, I would have to have that daily break in market structure first. Then I would be a little bit more inclined to try taking a trade on here. But at the current moment, I'm not just studying it and just giving you guys my predictions and analysis on what I think could happen. So last one, let's go over dollar CAD now. All right, so dollar CAD, we had a nice little rejection here after taking out the liquidity that we mentioned above this 31.80 level, cleared out that liquidity and ultimately sold off. We had this level on our charts as a potential old resistance, newfound support level. As you can see, we broke right through that. It did not act as support at all, so there's no need for us to keep that level on our chart. And so far, this market looks what? It looks a little weak, right? We've cleared out the liquidity above here, had a nice rejection. We're still in the consolidation. So again, not my favorite pair. This is why I've been primarily sticking to Eurodollar and GBP USD. It looks much clearer in terms of price action to me. But if we are going to continue lower in dollar CAD, I'm expecting them to run for 29 big figure down here. But keep in mind that we do have this daily bearish order block that's formed now, so we could in fact get a little bit of bullishness up until that level and then start selling off. So the level comes in at 31.09, but be watching out for potential resistance at 31 big figure to 31.09. But ultimately, if dollar index continues lower, I do expect this pair to go lower as well. I just don't have a lot of reasoning to want to trade this pair. I'd prefer just to analyze until something clearer sets up, because in my opinion, the only majors that look clear to me right now are GBP USD and Euro USD. And it's not just because I trade those pairs the most, it's purely based on the price action. So a lot of these other pairs either look weak or are in consolidations and they look basically bullish and bearish. So it's hard to get a clear read on which direction you think they're going to go. And that's why I prefer to stick to, the pairs that are giving me a clear bias. So if you, I'm just marking this out for my personal study. Just, letting myself know that we've ran the liquidity above these highs and we've sold off. So, a retest of this level would be normal, but we shouldn't expect it to get back above these highs if it's going to continue lower. Once it finds some resistance, we would expect the 29 big figure level to be the next target on the downside. And then a little longer term, the 27.50 level, which is all these lows here. We've got a lot of liquidity built up below here before this big push up. So that's what I'm targeting on dollar CAD. And that is pretty much it for all the majors and the things that I'm going to be looking at for this week. So I'm going to stop the recording here and I'll take you guys' questions.